how do I explain it to my grandma? I don't have to. The blockchain adoption curve is steeper than the internet adoption curve. This is the future. It's coming faster and quicker than anything we've ever seen in history. And when we go to events and people come up to me and they have tears in their eyes and they're thanking me for what my channel has done for their life, and they've been able to go from, look, I love it when people put in $100,000 and they become multimillionaires. That's great. When I got somebody that comes up to me and says they had started with $1,000 and now they've been able to pay off their student loans, I love hearing the stories of the people that had nothing, that have actually been able to move to a place in life where they're comfortable and they're at a level where they never thought that they would get to.
You still have core positions in Bitcoin, core positions in Ethereum, because you think they're going up, but you think also the big asymmetrical gains are in some of these new DeFi platforms.
DeFi is going to be the number one way that people are going to change their lives financially in the future. It is the horse and buggy versus the automobile. Traditional finance is the horse and buggy. Horse and buggies are very nostalgic. You like to take your date on a nice horse and carriage ride through the city. Maybe one day you'll take your date on a tour of a bank and you guys can remember the nostalgia of what it was like to have to go into one. Do you enjoy going to the bank? Unless it's just a bank teller that you think it might be your wife one day or your husband one day, you probably detest any time you have to go in a bank. Imagine if you never had to, and that's DeFi.
This is London Real. I am Brian Rose. My guest today is Ben Armstrong, the wealth coach, investor, and cryptocurrency enthusiast. You are the founder of BitBoy Crypto, a YouTube channel with over 1 million followers, and are recognized as one of the leading voices in the crypto industry. You first bought Bitcoin back in 2012, and 2 years later, lost your investments in the Mt. Gox scandal. Since then, you've dedicated your time and energy to ensure people don't make the same mistakes, with the aim to, quote, financially change the lives of all of your subscribers. Today, we will discuss everything crypto, including the recent volatile markets, your ideas on investment opportunities, and all things DeFi or decentralized finance, which I'm calling the greatest dislocation of wealth in human history. Ben, welcome to London Real.
Well, thank you so much for having me. Quite an intro there. Very excited anytime I can talk about crypto. And, there's certain times and moments that, it kind of all comes full circle, and definitely a fan of your show, and glad to be on here and be able to help your audience understand my journey and, hopefully maybe starting a journey of their own.
I love it. And Ben, I love your videos. You have a great way of conveying complex information in a simple form. And I appreciate everything you do. You're actually a great educator. And I want to talk more about how you do that. And it's been incredible to watch you. I wanted to kind of bring you up to speed with kind of my journey, and then I can tell you how we're going to kind of meet in the middle here with London Real and crypto, because it'll probably give you a little bit of background as far as what's in my head. And again, I also appreciate your honesty and your story. We both have gone down some dark roads of addiction and recovery, and we both told those stories, and I appreciate that. And maybe we'll get into that later too. So, quick background on me, and I don't usually start the show by talking about me, but I'll do it in this case. For the last 10 years, I've been the host of London Real. Before that, I actually worked as a banker in the centralized finance world. I was 15 years between Wall Street. I worked in Chicago, and I worked in London in the credit derivatives markets. So I've kind of been there and done that since the early 90s. I put all that on hold to do London Real, which, 10 years ago, I went all in on this kind of democratizing of information space. I was a big fan of the Joe Rogan podcast. I was on his show back in 2013, and I kind of did my own thing in London. And through the course of having conversations with interesting people, Ben, I started hearing about the word crypto, and I had people on. So back in 2013, I had crazy Max Kaiser come on my show, and we had an epic conversation about Bitcoin. I had just bought 2 Bitcoin. I just watched the old episode. I paid 85 pounds each, so about $100 each. And Ben, I spent them on the Silk Road. I'll be honest about that.
Yeah.
And I know you say that that's one of the reasons that saves, and was a use case for Bitcoin, and we'll get into that. But we had a great discussion with Max. And of course, Max was all in on Bitcoin. He still is. But it was an episode, and it was something we talked about. And then, of course, I played around the Silk Road, and then, life went on. And I was lucky enough to have Andreas Antonopoulos, Bitcoin Jesus, on the show. And he came on 2015, 2017, 2019. And Ben, he was an incredible, incredible guy at the time to really be able to articulate, cryptocurrency, but also what it could become, a really good evangelist. And it's interesting when you watch those episodes now, he was actually articulating what DeFi is, but back then it was what it could become. And absolutely. He's got a great little video I keep playing to a lot of my followers and students where he says, Brian, he said, you know, if Bitcoin is email, then what I'm talking about is the internet of money. And he said, basically, when you have a new system and there's only one app, like email, I got my first email account when I went to MIT in 1989, and I think I emailed my brother who was at Stanford, and then I didn't use it for 5 more years. And I thought, oh, that's the internet. Of course, you know, when all we could see was Bitcoin, it was like, well, you got this thing, but we couldn't see it was other things. And then Andreas said, when we saw a web browser, we said, oh, it's more than that. And I feel like that analogy is kind of what DeFi is, and I want to get into that. So that was my experience with it. But again, I couldn't see it happening, and I was doing other things. Last year in 2020, we spent pretty much the whole year fighting for freedom of speech. We went head to head with this incredible platform called YouTube, which we both have millions of subscribers on. And I disagreed with some of their censorship. We got shut down by social media platforms. I got shut down by PayPal. We got, you know, really taken all the way to the wall. But we kept fighting back, and we put out 57 episodes on our own digital freedom platform. And it was a serious fight, but we felt great about it. After that, I spent the last 9 months running to be the next mayor of London. And so we spent millions of pounds. We drove 5,700 miles to a digital battle bus. We did about 100 pieces of media. I went after the candidates like nobody's business, but we didn't win. And in the corner of my eye for the last few months, I started looking at DeFi, Ben, and I said, wow, something crazy is happening here. And it's the innovation that I hadn't seen since I traded derivatives in the 90s. And we put these complicated financial exotic instruments together and packaged them up as options trades and all these things. And I thought, wow, look what these guys are doing. And the things that are happening in DeFi, you know, it took 10 years for Wall Street to create what DeFi can do in 10 months or even 10 weeks. And the rate of innovation it's exponential and in some ways almost frightening. So again, that's my new perspective. And so I decided 4 weeks ago, I'm going all in on DeFi, like I went all in 10 years ago on YouTube and broadcasting. So for the next 10 years, I'm all in on this space. We created a DeFi Academy, and right now I've got hundreds of students right now that I'm getting up the education curve through practical action. That's what we're a big fan of here, actually putting on the trades and really experiencing what's it like. So that's my quick background. I know you say there's 2 camps out there. There's the Bitcoin maximalists, there's the DeFi evangelists. I guess it's obvious which one I am, but that's my story. First of all, I was wondering, maybe you could tell us your story, and then any thoughts on that whole monologue I just gave you.
Well, my first thought is you went to Wall Street and all you came back with was that suit. Is that right? That looks like a Wall Street suit. I love it. It's sharp. I need to get me one of those.
It's funny. I didn't actually dress this good when I was working in London. I did this after I got the show. But yeah, it's a good point. I used to joke that the banks actually financed London Real in the first few years because I was living off my savings. So much to their chagrin, it was. But go ahead.
Yeah. So, well, as far as my story goes, before I get into my story, I do want to say, I love the fact you mentioned Andreas Antonopoulos. I love Andreas Antonopoulos. I think he's been so dead on about so many things, and he's one of the best speakers on Bitcoin and crypto and Ethereum out there. And, you know, kind of when we start getting into talking about DeFi, it's going to be really interesting to look at some of the things that he said years and years ago about Bitcoin that have actually now started to translate into what DeFi is today. And so we'll get into that later. But as far as my story goes, so I got into Bitcoin first in 2012. I bought Bitcoin because I wasn't on the Silk Road. It was nothing to do with that. It was a software that I needed for a business I was running. It posted ads on Craigslist of all things. I was selling event tickets, concerts, sports tickets. Good thing I wasn't still in that business a year ago, right? When there were no sports or concerts for a while. But I got into it because of that. And I didn't really know what I had. And so I ended up making a lot of money over, not a lot of money in regards to what we do now, but I made a few $1,000s kind of overnight in 2013 when things popped up in November. And I sold it all because I was like, wow, I can't believe I just made this much money, because I was using Bitcoin as the original intent, which was a currency. And so I was buying my monthly payments on that software and buying new versions of the software that I needed. And I wasn't keeping it, but I had some money left in there, and pretty much overnight, like I said, it shot way up and I sold it. I was real excited. Like, man, I made a few $1,000s, took my family on vacation. Like, it was something kind of nice to do. but I didn't understand what I was actually looking at. And that was my big flaw in the very beginning. And that's actually what's driven me educationally to, help my audience be equipped with the education they need to be able to understand what they're investing in to make money over the long term. And so in 2017, I started, like you mentioned earlier in the intro, I did lose money in the Mt. Gox hack. I've got a claim with them. That's kind of like the crypto OG thing. You use BitInstant with Charlie Shrem, and then you got hacked on Mt. Gox. And so in 2017, I bought Bitcoin a few times and sold it in the middle, but wasn't really in the market. I started adding up how much money I should have because I had sold it early. At the time, my first Bitcoin I bought was $12. So over that first year, it ranged somewhere in between about 12 and $100. And then looking at how much it should have been worth in 2017, that's not even counting how much it should be worth today. I just said, man, I don't want anybody to ever go through this again. And so I decided to go on a journey to go full-time in crypto and to start making content. And a lot of my education in crypto, it came through making videos, because to do reviews on stuff, you have to understand what you're looking at. And so that's actually, Gary Vee, for instance, he says, just go out there and create, go out there and do stuff. And that's what I did. I started my channel in January 2018, started educating people on crypto and becoming more educated in the process. If you look at my education level of crypto when I started the channel versus where I'm at today, there's a reason we had explosive growth in the last year, because I was making several videos a day when people weren't even watching, but I was getting the education. And that was a lot of, the importance of, hard work and sticking it out even when people aren't watching. And so today we have basically the largest crypto community there is. We have almost 5 million total followers. We've got over 1 million on YouTube. We've got almost 500,000 on Twitter. We've got 2.7 million on TikTok, several other platforms. And I could retire today if I wanted to. I don't want to retire, because the mission of our channel and the passion of my channel is changing people's lives. They're giving them, the literacy to understand what they're looking at in crypto, because I wasn't afforded that opportunity in 2012 because the education resources just weren't out there.
Wow. That's pretty incredible story. And again, like you said, you're learning by doing, you're learning by putting the videos out. And even if if nobody's watching them, you're getting something from them, right?
Absolutely. And that's the hard work when nobody's watching that led to the success.
It's so true. Talk to me about this kind of fork in the road that happened. I don't know when it was, a year ago or 2 years ago, where you said pretty much everyone out there is either a Bitcoin maximalist or a DeFi evangelist. I watched some of the Bitcoin conference down there in Florida from over here. And again, like I said, I've been out of this space for a while, and I thought, oh, it's going to be a conference that talks all things cryptocurrency. And then I realized, oh my gosh, wow, like they're hardcore Bitcoiners, aren't they, in there?
Yeah. And yeah, there's a thing called Bitcoin Twitter. When we talk about these different areas of Twitter, as I'm sure crypto Twitter, political Twitter, Bitcoin Twitter, it's not a real place. It's just because you follow so many people in that niche, that's kind of all you see on your Twitter feed. But there's a Bitcoin Twitter where you don't even see stuff from other altcoins. But what's funny is we became the largest crypto channel, late last year. No, that's actually not true. Kind of in the fall of this year, or excuse me, early spring of this year, we became the largest channel. And in quarter one, we actually reached out to the Bitcoin conference people, and we said, hey, we definitely on a roll. We got grown into the largest following, got all this stuff going on. I would speak at the conference if, you guys allow me to speak there. And they were like, no, no, you cannot speak at our conference. I was like, okay, I guess the battle lines have been drawn here because the Bitcoin people, they don't want people that talk about DeFi and Ethereum there. However, the funny thing is I'm sure Brian, is don't watch the words, watch the actions. So many of the booths that were the sponsors at the Bitcoin 2021 conference were things that did deal with altcoins and did deal with things outside of Bitcoin. And so when it came to them taking money in, they certainly didn't mind taking money from altcoins. They know what's coming. And what's really interesting is there was definitely a split this year in the conference between, I would say the Bitcoin maximalists were actually the minority at the conference. They're a very loud, vocal minority. But the visitors, the people there, we had hundreds of people coming up and taking pictures with me. And so anyways, there were two different camps, and, there were definitely the majority of the people there. There were a lot of people there to talk to me and see me and took pictures with me and things. And we're definitely an altcoin camp for sure. We believe in Ethereum. We believe in DeFi. We believe in the decentralization of the internet. And to me, that's something that is going to be absolutely huge for the future. So,
well, let's talk about that split, because you mentioned Andreas, And again, he was back on our show in 2015, 17, and 19, and he's talking about this concept of DeFi. He's not using that term because it hadn't been adopted yet, but he's talking about this future infrastructure where we could, program things and build things, and it's going to change the world. And it was interesting how you said early on that all of that has now become true, but it didn't actually happen on the Bitcoin platform. It happened on Ethereum. And maybe you could explain that to people who maybe are either new to this space or don't understand why that happened and why you think that is also what's going to continue to happen.
But listen to Andreas Antonopoulos and reading through, the Internet of Money, all of his books that he's written on Bitcoin. He talked about that the first layer of technology from this point forward is always going to be money, because obviously we all know money makes the world go round, and everything ultimately gets back to money. And because of that, any technology that comes from this point forward is going to help kind of the rails of money to move faster, because we're still using basically the same technology to transfer money that, for decades now, when we've had better technology. As you know, the central banks kind of run the world. That probably has a lot to do with it. Bitcoin was kind of supposed to solve that. Bitcoin was supposed to be the internet of money. It was supposed to be the way that people transact from this point forward. But unfortunately, that did not happen. Why? Because I've got a friend, Jacob Canfield, who bought a mattress on overstock.com when they started accepting Bitcoin back in 2016. He bought a mattress that in 2017 was worth $400,000. Today, that mattress is worth over $1 million. The number one use case of Bitcoin, as defined by Bank of America in a recent report, is that it goes up in value. It appreciates in value. You're not going to want to use Bitcoin to send money, because having the Bitcoin itself is more valuable. And that's easily reflected in my story, to where if you look back at how much money I would have had if instead of buying the software, if I just would have bought the Bitcoin, I would have had millions of dollars. But instead, I just had the software. And so people have got to the point where they don't want to spend their Bitcoin. Now, we work with a company called crypto.com where we have a metal Visa card, and we take some profit sometimes and use that card. We support them. We think it's good, but we know in the back of our mind that all the money that we do spend is money that eventually would be worth more. But since Bitcoin's got these bull and bear cycles, it makes sense to lock in some profit sometimes by doing that. But overall, Bitcoin is not the future of decentralized finance. Decentralized finance is what Andreas Antonopoulos was actually defining 5 years ago, without even knowing, and beyond, without even knowing that he was really doing that, setting the tone for what would be the future, which is DeFi. So decentralized finance, in a nutshell, is what Bitcoin was kind of supposed to be in the beginning. It's removing the third parties, removing the intermediaries, removing the need for a credit card processing company to step in the middle and do business for you on your behalf and then charge you a fee for it. We're getting rid of that so you can do it directly. And basically anything you can do at a bank, is going to be done in the future in DeFi. And these bankers, they know this. Bank of America in that same report said they're not worried about Bitcoin. They're worried about decentralized finance. And that's why I think right now you see a lot of negativity during the recent price drop about Ethereum, because a lot of these institutions are accumulating Ethereum, because to understand DeFi is to understand Ethereum. It's Ethereum's number one use case at this point. And like you said, DeFi is going to be the number one way that people are going to change their lives financially in the future.
Yeah, and it was that Ethereum that allowed those smart contracts, to allowed that open source method where people could actually now start, creating those dApps and really starting experimenting. And I was trying to tell my students like an analogy. When I worked on Wall Street, Ben, it was me and maybe, 20 other shops like ours that had balance sheets, that had the regulation, that had the know-how that could offer these derivative instruments, right? Maybe the JP Morgans and the Bankers Trust and the Goldman Sachs and a few others. And so we were in there innovating, but you had to have 10,000 employees. You had to have a couple billion on your balance sheet in order to even offer these instruments. And so we innovated, we competed with each other. We made a lot of money, but again, it wasn't decentralized. Now I see almost the same thing happening in this open source way, where you got 4 kids up in Helsinki or 10 kids out in Singapore, or 8 guys or men or women, I don't know where they are, I don't even know their names, right? that are cooking up these fascinating new apps. They're putting them out there. Yes, there are bumps and bruises and hacks and mistakes, but the innovation's incredible. And again, it allows the user to decide, and then you can see where the money is, and you can see the market caps, you can see the flows, and since it's a public blockchain, it's all visible. This rate of innovation could never happen in a centralized finance world, not to mention the fact in centralized finance, not only wouldn't innovate, they keep all the money for themselves. I'm sure you read the book, The Innovator's Dilemma. It's actually just not in their interest, whether they're evil or not. It's just, it's not in their interest to eat their own lunch and take their own profits. And so I totally agree with what you're saying. What we're seeing, it's all based on that Ethereum innovation and the fact that, it's open source and other people can now go out there and play with it. There are now some issues now because everyone's on Ethereum, and I'm sure she can talk about, but I think that's a pretty good explanation. And just to be clear, you think you still have core positions in Bitcoin, core positions in Ethereum, because you think they're going up, but you think also the big asymmetrical gains are in some of these new DeFi platforms.
Yeah, absolutely. I mean, we've seen that over the last year, really 2 years now. DeFi really started kind of coming to the forefront, near the end of 2019, 2020. Throughout the first 6 months of the year, it really started ramping up. And then we call it the DeFi summer that happened last year. Yeah. It's when things really exploded. And yeah, there's certainly a lot of problems with Ethereum, but those problems actually open up opportunities for other coins. But we've seen some of the biggest gains over the last 2 years for anything. Projects like Aave, projects like Synthetic, projects like Compound. These are, a lot of them are yield farming or yield aggregators where people can do flash loans and do a lot of lending and receive interest, high APY returns and things like that through these platforms. And because these platforms are working so much and there's so much what we call TVL, total value locked onto these platforms, billions of dollars. I think right now it's at $50 billion total in DeFi. There was, I think the peak of the market, I think it was like 84 billion or something like that, that was locked into these platforms. The coins themselves were actually going up massively. Like if you look at Aave, you can't even quantify the returns of Aave for the last year. That's how high they were. It's like trying to quantify the returns from Bitcoin since 2009. It doesn't even make sense to put a percent on it. That's how much it rose. And so these platforms are the future because, like you said, they're unlocking the ability for the average person to be able to take part in the same kinds of financial instruments that the big money has been doing for years. It brings the derivatives market to the individual. There's $2 quadrillion in derivatives out there. We're never going to stop derivatives, which are basically just IOUs. But now the individual has the power to take advantage of those instead of just the hedge funds and the institutions. And Ethereum is bringing a lot of this to the forefront. And Ethereum is the backbone of decentralized finance. But there are other chains and other projects that are starting to, build ecosystems into this. Of course, Cardano and Polkadot, those are two massive projects. They're not fully launched in their full capabilities yet. They're Ethereum. Cardano and Polkadot right now, which I favor Cardano by a long shot over Polkadot. I do like Polkadot too. I own a lot of Polkadot. But these two projects are kind of where Ethereum was in early 2018 in terms of their ecosystem. So it was just ramping up, building the ecosystem, building the dApps, or as you call them, DApps, decentralized applications. That's what that stands for. So Cardano and Polkadot over the next year are going to start having those come out on their platforms. They're going to have coins launched on top of them. Aave, Synthetics, Compound, these are all coins that were launched on the Ethereum blockchain. We'll have similar coins launched on these other chains. So you look at those coins and how much they rose and how much those platforms, killed it. These other chains will have also similar projects, similar platforms, similar coins as well. And I do just, before we move on, I do want to reiterate what you said a second ago, which was my number one core position is still in Bitcoin. Bitcoin, to me, it is digital gold. It does lead the market. I do believe Ethereum, assuming we do return to a bull trend this year, I do believe Ethereum has a great chance to pass Bitcoin in market cap this year or early next year. But our core position is still in Bitcoin because the better you do financially, the better you want to hedge, right? So that's why we actually have Bitcoin as our core portfolio, because it goes down the least compared to the other coins. They drop massively in bear markets. But Bitcoin, we found, is a safe haven for a lot of our crypto gains. One way to look at it is the end goal for people should always be trying to collect more Bitcoin and more Ethereum. The institutions, the hedge funds, the manipulation, the whales, they want you to sell your Bitcoin. They want you to sell your Ethereum. Do not sell those two coins, no matter what. Do not sell those. You want to hold on to those. You want to accumulate those. That's what gives you a voice in the governance of these projects in the future. That's the only thing that gives you a voice, is being able to own those coins. Derivatives markets, Bitcoin futures contracts, Ethereum futures contracts, they're paper Bitcoin. It's paper Ethereum. You don't actually own it. You want to get on Coinbase. You don't want to go to Grayscale. You don't want to buy stock in Bitcoin through different trusts. You want to own Bitcoin, own Ethereum. If you can afford to own one Bitcoin and you don't own one Bitcoin, you are making probably the biggest mistake of your life. Most people that are invested can afford an Ethereum right now at $2,000. But even if you have smaller amounts, even if you can afford that, using a lot of these other altcoins when they drop down considerably like they have recently, that's how we were able to accumulate so much Bitcoin, is using a lot of these explosive gains from these smaller projects. And then when they kind of top out, you move that over to Bitcoin, Ethereum. There will be other projects in the future that are added to that list, I'm sure, like Cardano. That's definitely my third, favorite project behind those two. That game will change too. I'm sure institutional money will try to penetrate Cardano and Polkadot, some of these other top coins, Binance Coin, for instance, in the future. But for right now, Bitcoin, Ethereum, that's where it's at. That's what you want to own, but you can use the other coins to get more of that.
Yeah, and I really appreciate that about you, where, you're open-minded enough to be able to see the value in each coin and not get into this cult-like behavior. Because as you said, as a core asset, I think you even said you can see Bitcoin going to $1 million, $1.5 million sometime in the future. It's something you want to own, but it's not going to cause the building of the infrastructure of DeFi. It's not going to be a part of that, or we don't think it is, as much as they might want it to. That doesn't mean you don't want to own it. And again, Ethereum, it's going to be that backbone. Now, there could be some other projects that come along with it, but you still believe that owning that Ethereum is still the great long-term play, and its market cap could even approach the Bitcoin, which means those prices get definitely a lot closer. And those are interesting points. You made something really interesting about derivatives there, and let me talk about that. And by the way, I love the companies you mentioned. We've actually got the CEO of Aave on here in a couple of weeks, and we got Charles from Cardano coming on here, I think, in the next month.
Love Charles.
And we're going to talk to both of those gentlemen. Fantastic, visionaries going on there. I worked in derivatives in the 90s, and they got a bad name in the 90s and then in the 2000s with credit derivatives because they supposedly took down the housing market. What took down the housing market was bad risk management, basically bad risk management. And you could say it was greed and all of this stuff, but it was really bad risk management. Derivatives have been around since humans have been around. Derivatives are everywhere in our lives. A dinner reservation is a derivative. An insurance contract is a derivative. Promising someone you're going to pay this amount for their corn when it comes out of the grounds, that's a forward contract, which has probably been happening for the last 50,000 years. So, and again, the derivatives themselves aren't the problem. It's just understanding the risk. And like you said, before now, it's pretty much been the financial institutions that controlled that. Now we have access to them. And if you can understand the risk, it can be very empowering as an individual. And again, I'm blown away by the derivative innovation going out there with some of these companies. I'm just like, wow. And honestly, it's almost getting so complicated because, back on the Wall Street days, I had to make markets. A customer would come and they'd want a two-way market on an off-balance sheet fixed floating swap or a derivative on a 10-year treasury 5 years from now. It wasn't exchange traded. And I'd have to sit there and make markets for the customer. Now, I didn't get tokens to do that. I didn't get paid. We got paid because of our bid offer spread. But with DeFi, you can see people now being rewarded for liquidity pools. You can see all this innovation that Wall Street could never have even thought about. How do we reward a market maker? How do we give them some extra money or some tokens? So I'm blown away. And I haven't been this excited about something in a long time. And when you talk about this innovation, it gets me excited, Ben. So many things, to talk about here and understand. And like you said, these Polkadots and these Cardanos, these could become these things in the future that we've seen Ethereum become. But it's interesting that you're saying still hold those core assets. And again, don't hold the future on it. Don't hold the institutional stock in the institution that has it. You want to actually own that in your cold wallet, ideally, a place where that's yours. Why is it so important to actually have the asset?
Yeah, so this is what we call custodianship when it comes to crypto. It's at what level do you actually own your crypto? Okay. And I think that two of these levels are great. I think one of the levels is very bad. So we have the lowest level of custodianship, which is you literally don't own it. You can never own it. We're talking about apps like Robinhood. Okay. It's all derivatives. You don't actually own Dogecoin, for instance, on Robinhood. If stuff hits the fan and you want to pull your Dogecoin out, you got nowhere to withdraw it to. You can't withdraw it. And you see what happens when it's at the most pivotal times is they close the trading on it. Now, look, certainly Coinbase has some issues too with overloaded traffic, and Binance. They both do when there's overloaded traffic, but it's a little more strategic and underhanded from companies like Robinhood, that they want to make sure that, of course, they're giving the data to the hedge funds from their retail traders, and the retail traders are always at the loss, which is the exact thing Robinhood claims to be against. And so I don't like Robinhood. Grayscale Bitcoin Trust. This is another company where you invest in the stock market. You're investing in the stock that has a 1-to-1 match. It's actually not 1-to-1, but you have a share of a Bitcoin on paper. You don't own that. You can't withdraw. So someone I know who got heavily into Grayscale because they're come from from a traditional market. Well, eventually getting in through Grayscale made them understand they actually don't own the Bitcoin and they want to own it. So the second level of custodianship is exchange custodianship. This is where you have an exchange like Coinbase, where you go there and you buy the asset and you don't own what we call the private key. This is the secret password to your crypto. You don't own that. So if Coinbase were to whatever reason, like it's in California, like let's say that it fell into the ocean. Let's say California fell into the ocean tomorrow and all of the servers for Coinbase were in California. You lose your crypto. You don't have access to it. Now, that's an extremely unlikely scenario. And I'm actually way more in favor of people holding coins on exchanges than most people. And the reason is because the people that hold crypto on exchanges, most of the time they're at the beginning of their journey and trying to move to what we'll talk about is that third level of custodianship in a minute. I would say far more people have lost money in sending Bitcoin to wallets without knowing what they're doing than actually exchange hacks from major exchanges like Binance, Coinbase, Binance US, KuCoin, exchanges like that. So you don't own it per se. However, when you're ready to move to the third level of custodianship, you can withdraw it. You can withdraw your crypto from Coinbase. So you buy it on Coinbase, you buy Bitcoin on Coinbase, and then you set up a personal wallet and you can send it there. So you do actually own it. You just don't technically own it until you pull it off, but you have the option to do so. Robinhood, level 1, you can't do that. Exchanges, level 2, you don't own it until you withdraw it, then you actually own it. The third level of custodianship is simply having your own wallet. There are what we call hot wallets and cold wallets. A hot wallet is like an internet-based wallet. So you got to be connected to the internet to use it. A cold storage wallet would be something like a ledger, which is a device, it's a USB device, or there's even things called paper wallets, and there's even more extreme ways to store your crypto. It's basically where you're taking your crypto off of the internet, so it cannot possibly be hacked. Nobody can get access to it and things like that. When you own your own Bitcoin or you own your own Ethereum in that third level custodianship kind of way in a hot wallet or a cold wallet, you own it. No one can take it from you. If the internet went down tomorrow, if there was an EMP somewhere in America and we lost power for a year, as soon as you got back to the internet, your crypto is still there. It's untouched. Nobody can hack it. And a lot of people bring that up. You don't hear it as much anymore. People used to say like, well, what happens if the internet goes down? Like, how is crypto affected? Well, if the internet goes down, your credit card doesn't work. Your debit card doesn't work. Nothing works. You're not going to be able to go to the ATM. You're not going to be able to go to the bank. They're not going to have any power. So, the whole thing is in that third level of custodianship, you literally own your Bitcoin. And that's what makes Bitcoin and crypto. I don't use the word cryptocurrencies. A lot of people use the word cryptocurrencies. I've stopped using that word because that implies everything's trying to be money. It doesn't really describe what crypto is. We say crypto assets because it's an asset that you own. It's property. That's what makes it different. And that's why trying to weave your way through up to the third level of custodianship is very important. And I would note that Exchanges like Coinbase, they also have different levels of custodianship within them. There's a big tip I give to a lot of people if they use Coinbase is there's something called Coinbase Vault. This is where you can actually do a much higher level security for your crypto on Coinbase to make sure it doesn't get touched. And it makes you actually invulnerable to SIM card swaps and being able to, where people basically switch your phone number, they get access to your Gmail because you connect it, your phone number to your Gmail. That's a big no-no. If you can disconnect it. They get into your email. They have access to everything in your email, including your Coinbase. It all happens in about 5 minutes. So the Coinbase Vault has workarounds to that where you don't have to worry about that happening. So I do want to point that out for anybody who's interested.
Yeah, that's a really good description. And funny enough, all my students are going through this whole process this week. They're going from centralized exchanges to the hot wallets to the cold wallets, and we're just forcing them to do it so they actually get it. And again, by taking action, it's a great education tool. Because they're like, oh, it's the private keys and now I have them. And like you said, if the internet does go down in that worst case scenario, you're gonna have a lot bigger problems. Like where's the food? Where's the riot happening?
Where are the zombies?
Yeah, where are the zombies? And again, the internet will come back up at some point. And again, you got your private keys. So that's a really good explanation. And again, I had Robert Kiyosaki, author of Rich Dad Poor Dad, on a couple weeks ago. And he said, Brian, when I own gold, I don't own a gold future. He's like, I don't own a gold promissory note. I either have the gold in my house or it's locked in a safe where I have the key. He's like, when I own real estate, I know where the property is. It's on the corner there. So he's big into real assets, which is why he's actually a fan of certain crypto assets as well, because he sees them as much more real than the fiat currencies.
Absolutely.
And that's a whole nother rabbit hole to go down. Let's talk about this bear market right now. We've crossed a few of our 50-day averages and 200-day averages. You've been through the bear markets before. We actually saw the DeFi summer last year come out of a correction. What's your read on this? One of the things I'm trying to bring to my academy is 30 years of trading experience to a market where I see zero. And I see a lot of newbie behavior, a lot of panicking, a lot of people telling me how they got diamond hands while their hands are melting off. And just, again, not very intelligent trading strategies at all. What do you tell people to do in a quote unquote bear market? How should people behave or think or have discipline when something like this happens?
The bear market is when you get rich, for sure. The bear market is where all the money is made in crypto. By the time the average new retail investor has heard about Bitcoin in a way that gets them excited to get into it, it's already made them, most of its moves that it's going to make. And we saw that, people got excited about Bitcoin when it broke a new all-time high. And then within 2 weeks, it was already at 42K. And then it went up to 64K. But Bitcoin was at 3,900 in March of last year, of 2020. So when you really see those massive gains that can be made at the beginning of, the bull markets, when a lot of people aren't really excited about Bitcoin, that's where a lot of the big money is. But if you look at a lot of the altcoins and you look at, I love to talk about Cardano. I love Ethereum. I love Cardano. There's by far and away my two favorite projects. But Cardano was, right now it's at $1.28 as of the time of this recording, or right before we came on air here at least. It got all the way up to $2.50 at the peak about six weeks to 2 months ago, somewhere in that range. It was at a penny to 2 pennies for almost the whole bear market between 2018 and early 2020. That's where you make all the money. But markets are so psychological, as you know, Brian. It's that I remember there's a guy, he's a good friend of mine, and he told me the entire bull market of 2017, man, I tell you what, if Bitcoin goes back down to $3,000, I'm going to mortgage my house. You know what happened? It went down to $3,000. You know what happened? He didn't mortgage his house. Yep. Because the fear that comes in when it drops, it just pulls that momentum away. And that's what causes people to leave crypto. The stats say if you're in crypto for 4 years or more, you'll become wildly rich, period. As long as, you're not investing $1. As long as you're putting money into crypto and you stick through an entire 4-year cycle, you are going to make so much money because the gains are astronomical from the bear market. So I want to be clear about that. The bear market is where the money is made. Are we in a bear market right now? Now, that's a great question, and it's a very complicated question because all we really have to base where Bitcoin is today on is where Bitcoin has been throughout history. And that is something that we've really done on my channel for years. And that's really why my channel blew up. One of the reasons over the last year and a half is because we were so dead on, because we used the history to judge where it's going. And up until the last 2 months, we had been dead on with where it was going to. But more recently, things have gotten a little fuzzy. So we have three bull markets in history to look at. You have the 2013, 2014, you have 2016, 2017, and you have today. Okay. Now, what really drives the Bitcoin price, in my opinion, it's not adoption, it's not institutions, it's nothing more than the halving event. This is where the production of Bitcoin is cut in half every 4 years. To put that in perspective, right now, about 900 Bitcoin per day are being created. In 2024, that number is going to be cut down to 450 Bitcoin per day. That's through Bitcoin mining, which is a whole different subject. My favorite number in Bitcoin, my very favorite number, my very favorite statistic to talk about is that when you look at the 12-year history of Bitcoin, this shows the compound effect of that cut in production. In 2009, there were 50 Bitcoin mined per block. Today, we're down to 12.5 due to all of the halving events, okay? Or actually 6.25. When you look at the first 12 years of Bitcoin, 18.7 million Bitcoin have been mined in 12 years. 18.7 million in 12 years. The last Bitcoin does not get mined until 2140, so 119 years from now. 12 years, 18.7 million Bitcoin. 119 years, there's only 2.3 million left total to mine. The last Bitcoin cycle, there will only be one half of one Bitcoin mined in 4 years. It's mind-blowing when you think about that compound effect of the cut of production. Right now, 900 Bitcoin being mined per day, Grayscale, PayPal, Square, and MicroStrategy, not even counting Tesla. Between those four companies alone, they're buying over 2,000 Bitcoin per day. There's only 900 being made per day. That puts into perspective how much demand there is now. And every 4 years, we go through a supply shock, okay? That is what really drives the price of Bitcoin. It's not, did Goldman Sachs tweet about Bitcoin today? It's not, does Tesla think Bitcoin mining is great or bad today based on, the whim of I call him the muskrat, okay? That's not what drives the Bitcoin price. It's that halving event. None of the fundamentals of Bitcoin have changed between today and 2 months ago when it was at an all-time high of $64,000. And when you zoom out, overall, the price always goes up. But understanding that 4-year cycle is so important. I say all that to sum it up is this. In 2013, we had an 83% dip in the middle of a bull market. Everyone thought it was the bear market, it was over. By the end of 2013, it had one more massive leg up. In 2017, we never had that. We did have a retest of a Fibonacci level that matched 2013, its dip, but it was not as dramatic. People look at the 2017 market as basically just went straight up left to right, okay? There were certainly corrections, but there was never over a 40% correction in the latter half of that bull market. It looks like now we're either, for this market cycle, we're looking at either one of two things. We're either looking at something different than we've ever seen in history before with Bitcoin, or we're looking at a similar pattern to 2013. And I think that's what we're looking at. We're having a mini bear market inside of a larger bull trend that will continue until the end of the year.
And the indicators recently we're crossing the 50-day and 200-day average, right? Which are typically signs of bear markets. But you're saying this doesn't behave the same way.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.